Hello traders, Gary Wagner here just after 12 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 9th day of November 2017, and this is the Daily Report for Gold and Silver. We did have a moderately higher pricing in gold today, finishing up about $2 on the day at $12.8570. We did send out a special trade alert recommending the initiation of long positions in gold, roughly in this area. Of course, we'll cover that in detail as we pull up our first chart. Silver was lower on the day, down about 15 cents, closing below 17 at 16.98, and that was all in light of an equities market under pressure, as well as a lower dollar index, down about 0.3%, 34 points, and settled at 94.42. Traders, yesterday we talked about a unique pattern originally coined by Steve Nissan, really the grandfather of bringing Japanese candlesticks into the United States, that he coined a scouting party. It attempts to describe action as market participants attempt to take a price point of a given commodity above resistance or break it below support. We're well aware of the fact that gold has been really trading sideways, defined at an upper level at about 1282, which corresponds to a 50% retracement of the largest rally we had this year, a $163 rally, with support roughly being at 1263, which can also be seen in terms of an expression of a 61.8% Fibonacci retracement. When we look at recent closes in the market, as this market sold off, of course, it did track above that resistance until it broke below. But if you take a look at the hash marks on the right on this bar chart, because that represents closing price, we can see that for the better part of 2 weeks, the market failed to trade and close above that price point. Now, last week we did have one attempt in which the market traded above, but closed significantly below, hopefully, former resistance in the market. We noticed something different occur on Monday, when for the first time since the market has been trading in a defined range, we actually saw it close just at the defined level of resistance, which resides at 1282. We can see that in terms of the candlestick right here, just at or slightly below that particular line. Now, on the following day, which was Tuesday, we certainly did not get any kind of follow through. In fact, we saw the market soften a little bit as it traded well into the former trading range and closed at about the midpoint of the trading day. But yesterday, we now had another spike and a close definitively above resistance at 1282. And then today, we have some follow-through buying with dollar weakness, in which we're up about $2.70, currently trading at 1286.40. And we can easily see that now for the second day in a row, we have had a solid close above former resistance, which brings us to our current trade. This morning, I did send out a special trade alert recommending that traders initiate long positions in gold. Traders taking that call got in roughly at 1287.50, so about $1 from here. After getting into the trade, we saw the market climb to new highs at about 1289, only to soften ever so slightly on the close. But to me, what is critically significant is the fact that we are now witnessing, for the second day in a row, gold's price above resistance, which means we could be experiencing that shift in polarity when resistance becomes support. Because considering what we have seen recently, and let me go ahead and compress this chart, because we talked about another scouting party which occurred back in August, and that happened after the market had an unsuccessful attempt to breach 1300. This is the first occasion, mid-April. Then again in June, market comes down on each occasion. And then the last attempt, third was the charm, so that middle of August we had the market moving sideways in a defined range. When prices broke, they broke significantly above 1300, and that was the second part of this rally when gold traded from approximately 1300 to 1363. And so I think that we're in a similar scenario right now where we are, in fact, breaking above former resistance. We can also say that this double bottom we identified seemed to be pretty eloquent in providing a level of support on a technical basis. And the question is now whether or not this new level, meaning 1282, will become support as opposed to resistance. Therefore, maintain your current long position in gold, 1287.50. Currently, we do have our stop sitting below 1272, and the rationale behind that comes in with this low that occurred yesterday at 75, and then once again we have this low coming back 3 days, this low coming in at about 1272, and it is that low that we are placing our stop below. In other words, rule of thumb on an effective stop is to try to place it just below the lows that it hit over the last 3 days. Traders, we identified a double bottom all throughout the last month or so, but over the last couple of weeks we have seen the market trading in a tight and consolidated manner with a defined range of only about $20. We talked about the fact that we either wanted to see it break above resistance or below support before taking our next move, and that's exactly what we saw yesterday when we had a close above resistance for the second time this week and the second occurrence since the sideways trading pattern in gold. This morning we had some follow-through buying and we issued our signal. My recommendation, of course, is to maintain our long position as well as our current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.